Good evening, everyone. I hope we've all had a pretty solid Christmas break. For those of you that enjoyed this holiday, spent some time with the family, hope made it back home safely. Um, Going to be going over the last couple of days as I have basically been out. Been between work being absolutely wild and the holiday season, that popped up. We got kind of busy, not able to look at the charts, not able to trade. So going into last week and into this week, probably be very limited trading, probably limited videos as well. But coming into the new year, we're going to be coming in hot. Videos pretty much every day that I am alive is the game plan. It's going to be a lot of work, a lot of grind. Huge thanks to everybody that does watch these videos, especially somebody out there that does watch. Appreciate it. Um, all the support anybody has given, stop by. I do appreciate it. Let's get into the breakdown. So, month of December, right? All of the past several months, basically, we are in a basic large balance from 43.2750 to 35.02, big large balance. As you can see, I have it displayed here. We have set a succession of lower highs as well. We have attempted to break this trend line once or twice, I should say, and it failed each time. And this coincides pretty well with the 200-day moving average on our daily chart, and I'll show you that here in just a minute. But big picture, monthly, these are monthly candles. We're just basically in a large balance zone. We attempted to come out of balance to the downside because we initially were in a balance. Um, to begin the start of September. October, we attempted to push down, try to go trend down, didn't get anywhere. And then coming into November, we put the monthly back into a balance. So using August's high and then October's low, that's where we get our balance. And we're just trading and chopping around on the inside of those monthly balances. So let's go to our weekly. You'll see the weekly has done nothing but trade inside the monthly balance. However, the weekly has been trying to trend down. We've been one time framing down since our outside week down that occurred on the week of the 12th this month. Outside week down, began to one time frame down, continued it last week, very small range, and then this week we've opened up inside last week's range. We're looking to either take out last week's low or take out this last week's low or a high, excuse me, take out last week's high, put the weekly back into a balance, and then you will encompass pretty much this whole, what I'm about to highlight here, this whole section as your balance. Basically just meaning market's looking for more generated information, and you'll see that here on the daily when I go to it. Let's go ahead and clear that out. And once again, you can see the succession of lower highs and lower lows being put in even on the weekly chart. Now I have done some work with the Fibonacci extensions and whatnot, and uh, we basically retraced the same amount as we retraced here. So it's almost identical retracement uh, from that August high and then this high, basically the same retracement. So maybe we roll over and get another low, kind of like we did here. But from what I'm showing on the extension side of things, from a Fibonacci standpoint, for anybody that looks at that type of technical, we should revisit the monthly balance low at some point in time. Not saying that it's going to happen by the end of this year, but considering there's only 4 more trading days in between here and then, uh, going into the new year, we'll see what happens. Daily, you'll see more of that lower high, lower low trend going down. And then you can see the 50. I'll clean this up a little bit. Try to get rid of all those other moving averages I had on here that really don't mean much. We're just going to be looking at the 50, the 20, and the 200 day moving forward. But you can see the 50s up here at 39.09. So maybe we'll revisit that at some point in time. Oof, that's ugly. But for now, the daily is in a balance. We have basically an inside day today. Uh, we're going to call it an inside day, and I'll show you that once we get into the intraday, why we're calling it an inside day. We had an inside day on Friday, and then we had a failed attempt at a trend day down on that Thursday of last week, and it didn't work out, and I'll show you that on the intraday. But for now, we are in a 4-day balance is what I'm calling it. Paul, my mentor, he is calling it a 3-day balance using just this high and this low. So for me, it's a 4-day balance using all of that range right there. 4-day balance, looking to see if we can back test the 50-day moving average and then our daily balance high. And at that point, we'll be coming out of balance. If we get any acceptance above it, be coming out of balance one time frame and up to go back test the 20 and then potentially the 200-day moving average. Uh, but we could. Nothing saying that we can't take out the low and move lower. Nothing saying we can't sit here and chop back and forth and just kind of reduce the range going into the end of the year, which is kind of something we're expecting. Range and volume is probably going to be light and small as we go into the end of the year, as today was only, wow, 813 contracts traded of the ES, so not a very large amount. Let's go into the intraday here and we'll look at what has occurred. So on the intraday, let's go back and look at what occurred on Thursday and Wednesday of last week. So Wednesday, basically we put the daily, we'd been trending down on the daily, and then Wednesday we'd put the daily back into a balance as short covering came into the market. P shape on that Wednesday had a 9 wide point of control, set our high a day, didn't really do much, chopped around a good portion. Then come in Thursday, we opened lower, took out that daily low, and remember we're still in a balance, right? Took out that daily low, rotated lower, lower. The market had a massive sell-off, as you can see. We one time frame down. We had single prints. At one point in time, I believe it was a quad distribution at one point in time. But late in the day, as we got near a visual area down here at 37.8850, I believe there was a weekly low there. As we got down there, we found basically no supply, not enough supply to keep us going down lower. Bids started to hit the market. Shorts began to panic, and we rocketed up V shape, which tends to be the trend here recently on these short covering rallies, as they are pretty freaking vicious. All those sets of single prints got filled, and we just went out with the high of day at 38.7550, and then the low day at 37.8850. Not a lot going on there. They come in Friday. We traded inside the daily range, created a 10 wide point of control, basically just chopping back and forth, meaning 10 time frames. We chopped back and forth the same price at 38.61. P shape also for long liquidation. Then we come in today, and basically same story, different day, smaller range, different prices. Not a lot changed. We attempted early on in the day, before, like in the pre-market, we'd attempted to open up possibly higher with a gap, but before we even opened up, we had liquidated down back into the day's range. And as you can see here, we opened up inside the day's range at 38.6950. We attempted to take out that Friday high, didn't get it. Rotated back down to that 10 wide point of control. We got that. Attempted to bounce off the afternoon pullback low, didn't get it. There was enough supply, kept liquidating. Finally found a bid down here in B period at 38.37. After that, wasn't any real trades to take, as the market was just chopped back and forth, kind of a large range in A and B, and then we just chopped around for the remainder of the day. C period took out Friday's high, didn't get very far from it, right? We took it out by 2 ticks. 38.7250 was Friday's high. Today's high was 38.73. 2 ticks we take it out by. A very poor high, basically meaning supply shut off or demand shut off up there, and there was enough supply to push this bad boy back down. Same thing in F period, 38.7275. We couldn't even take out this high or this high. Wasn't enough volume, wasn't enough demand. Nobody wanted to buy up here. So guess what? We rolled over and we continued to pack in volume at this 38.6175 level. So 38.61 is a massive volume area, as you can see here, or I'm highlighting. All in this range, packed in lots of volume. So 38.61 seems to be an area where people are very confident price is can hold, as we've traded back and forth through it for 2 days, back and forth, just chopping around. So we had a little bit of liquidation here in I, J, and K period, which presented a pretty good long opportunity to get back up to this wide point of control where price, or basically a mean reversion trade, where you try to buy the dip or buy the extreme or fade the edge to rotate back up. And it turned out to be a pretty good trade. I probably would have taken it here in L period once we took out K's high, to get the stop run and then momentum start to come in as shorts begin to cover. And you come back up into that 38.61 where traders were happy to see price trade at. So that's basically the gist of it. Inside day, we go out with today's high, today's low, and a 10 wide point of control here at 38.61.75. Let's go ahead and mark that. 38.61.75. Wide. It might be 11. Let me count this. 1 time frame, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 wide point of control. So 11 out of 13 time frames traded back and forth through that 38.61.75 point of control. Strong area. Price is it acts like a magnet. If you can't tell, basically price pulls. It's like a rubber band almost. The rubber band gets stretched and then it comes back to that point to where it got stretched from, right? Rubber band got stretched, and then once it's released, it comes back into that point where you have the control of the rubber band, right? So price stretched up here, rotated back in. Price stretched down here, rotated back in. That's how you think about it. Just a rubber band being stretched. At some point in time, it's got to come back to where it was once stretched from. So point of control right there, 11 wide, 38.61.75 magnet. Then you have your poor high today at 73. We'll go ahead and mark that. Today's date, 27th. 27th. Low of day. $25. Go ahead and mark that. Boom. All right. So if with these 2 days being kind of an inside day, if the market takes out today's highs at 38.73 and then the high day from Wednesday at 38.75, market should rotate up to this 9 wide point of control at 39.05. So if we take this out, then we should rotate up to 39.05 and then 39.1875. If the market opens up lower and price begins to move lower, then we should take out today's low at 38.70 or 38.3725, get this daily low at 38.2125, and then aim for this daily low down here at 37.8850. If market continues to retract with volume and price ranges becoming smaller, then you can expect to trade back inside today's range and value around this 11 wide point of control Also, pretty wide point of control from the previous days at around 38.61. So, that being said, ladies and gentlemen, use stops if you're trading. Hope you had a great vacation away from work. Small little vacation for some, like myself. Catch you in the next one. We'll see you.